Being able to trade without indicators is one of the most crucial things that you need to learn as a day trader to be successful long term. I got a ton of comments after my live stream, so I'm gonna explain why naked trading, support and resistance levels, and a great trend line is going to dramatically help you in your day trading. Welcome back to the channel, everybody. My name's Artie, and this is The Moving Average, a show where we discuss everything day trading to keep you profitable on a consistent basis. And during yesterday's live stream, I was looking at US 30. I really wanted to trade it that day. So I was doing a markup on the charts and I saw an opportunity to sell. I ended up snagging a clean 2% profit on the day. You can see that right here. I could have held the trade longer, obviously, but I like to be in and out of my trades very quickly so I can get on with my life. But let me show you exactly what I did on there and how you can draw a better trend line and actually use a naked chart, just completely using support and resistance levels and a trend line to help you predict which direction you need to go with your trade. Not only that, but it also helps you stay in a trade longer. So now we are looking at US 30. I've already marked this up with the key support and resistance levels. You want to do this on the 1 hour time frame. It's extremely simple. Just look for these little big peaks and valleys and draw lines across them. You don't want too many. You want like 2 above the current price and 2 below the current price. Now, the reason it's important to do this on a higher time frame, because if you are looking at a lower time frame, like the 5-minute or the 15-minute, you don't get an overall view of what the market is doing. For example, this is the area that I was discussing yesterday during my live stream. Now let's take this area down to the 5-minute chart. If you are locked to a smaller time frame, you are putting blinders on yourself and only focusing on short-term trends, which is one of the worst things that you can do for yourself as a trader. If just looking at the 5-minute time frame, you can see this huge bullish momentum, creating higher highs and higher lows consistently. At this point, you completely believe that you are in an uptrend, negating the fact that on a higher time frame, we are on a very strong downtrend. So as this bullish momentum continued up, you saw a break and retest of a previous level of resistance, and you went long and you got screwed hard. If anybody watching this video went long yesterday on US 30, you got cooked. That is why you need to stick with a 1 hour chart. Trading between ranges is one of the easiest things to do, especially on a higher time frame. You have a higher stop loss and a bigger take profit. So with that comes a smaller lot size, but your trades are much safer. Top to bottoms of ranges and bottoms to tops of ranges. But what I really want to discuss, which is the question that I got the most, was trend lines. As you can see here, we had this high, a lower high, a lower high, a lower high, and a lower high. Just glancing at this chart, within the first 30 seconds of marking up these support and resistance levels, I immediately saw this. You want to draw your trend line where it crosses all of those points the most amount of times. That's going to be your most accurate trend line. The reason price respects a trend line, I'm going to put this in a way that you guys can truly understand. Price moves dependent on buyers and sellers. If sellers are weak, the buyers take over. If buyers are weak, the sellers take over. So right here, we have the seller's strength. They push the price down. The buyers try to bring it back up, but the sellers keep their strength and push it down here. The buyers try to bring it up again, but the sellers get stronger and don't let this price get higher than the previous high. The buyers try to bring it back up again, and the sellers push them down even further and even further. This is massive strength on the seller's side, and they are basically winning the battle between buying and selling, continually making lower highs. On each one of these, you can see that there was a slight breakout of that trend line and then a big fat reversal every single time. So putting it in replay mode, at the time that I did the live stream, which was about 6 a.m., 3 hours before London session, I predicted the price would come up, retest this trend line, and then continue down to this next zone. And that's exactly what the price did. But during that time, we had a breakout of this trend line. This is the trap that 90% of retail traders fell for. They didn't see it here and they didn't see it on the previous 5 times that it happened, but every time they were a part of a liquidity grab. If you have not seen my liquidity pool video, watch it right here. So once the market opened up, we had a big fat rejection, and the next thing that happened was a big fat candle. And you guys know that I love to trade my big fat candles. And as you guys can see, it went all the way down to that next level of support and resistance. I'm a scalping fanatic. I cannot hold trades for hours and hours and hours. My life is way too busy, and I like to take my profits and run. So once I saw this big ass candle, all I did was short it down to the next major bank level, which are even numbers, so 34,400. Now in a downtrend, you wanna draw your trend line across the tops of these peaks. Conversely, on an uptrend, you wanna draw it on the valleys, the bottoms of these moves. It's very, very simple. Once you start seeing these absolute bottom points on a higher time frame, they are much more significant than they are on a lower time frame. Now, think about this. This is called a trend line. The price action is following the trend. But what happens when the trend stops or we start to see a trend reversal? It means that the trend line is broken. This works every single time. If you have your support and resistance zones drawn up and you draw your trend lines, once that trend line is broken, we have now gotten out of that trend and you should be looking for the opposite direction. So this is your first area where the trend line was broken, retested, and continued down. Now we are in a downtrend, so we draw our trend line across the top. Price kept moving down and then broke the trend with this huge, huge, huge bullish candle. We are now looking for an uptrend. Now you want the most touches on your trend lines, right? So you wouldn't start with this point, you'd create the new trend after this big ass candle. Now we broke that trend line again, came up to retest it, then we started a new downtrend. Broke that trend, came down to get close to retest it, and then shot back up again. This works every single time. Now, keep this one thing in mind. You can see the angle at which these trends are. We're getting about 45-degree angles consistently. But then this one gets a little bit slacker. There's not too much momentum. This right here is your first indication that the trend is getting weaker and weaker, and we may fall into a period of consolidation, meaning that the price is ranging very slightly top to bottom. And that's exactly what happened. We started consolidating between zones, very tightly ranged, for several days. This is why you need to know support and resistance zones so that you can still be able to make trades during these periods of consolidation. Then we started seeing new bullish momentum being formed, and we can draw another trend line across that. The trend was broken again with big bearish momentum, so now we are in a downtrend. I'm telling you guys, being able to naked trade, no indicators, just using this is going to give you so much benefit in your day trading. You're gonna be able to see things and be able to trade different zones and have larger trades versus small scalps. Using this knowledge and being able to scalp off of it, that's why I've been doing so well at my day trading, because I know that that's the direction that I'm going in. I'm gonna get a quick 25-minute scalp out of it and walk away. I'm completely done trading in 25 minutes. So if you guys are struggling with fundamentals like support and resistance and trend lines, watch this video again. Watch it again and again until this is solidified in your head, and then go test it on your favorite asset to trade. Whether it's Bitcoin, Ethereum, whatever, it always respects the trend, and when it breaks the trend, it starts a new trend in the opposite direction. Now again, you only want to do this on a higher time frame. Do your analysis here on a higher time frame, like the 1 hour, then take it down to the 15-minute, and you will see where your entry candles are. You will see these big, fat candles. Because you were only looking for short positions, because you saw that trend line, you saw this one candle and that's your entry. You're at a previous level of support and resistance, then you get a big fat candle to the downside, that's your entry. You retest a trend line and a level of support and resistance with a big fat candle, that is your entry. Even if you waited for this big one to close and you still targeted that previous zone, you would have gotten a clean 58 points off of this US 30 move. Support and resistance, trend lines, they are your friend. You need to master them. Now, this is just a piece of it. The other crucial step to this is looking for divergences. So if you guys want to learn everything there is to know about an RSI divergence or any type of oscillator divergence, watch this video right here. And if you guys got some value out of this video and you like the way that I teach, consider subscribing to the channel by clicking this button right here. Thanks so much for watching, and we'll see you in the next video.